Hello and welcome to today's Office Hours presentation. This is your host, Paul Hoyt. Our Office Hours presentation is a relaxed, informal mentoring program for tribe members, which is held every Monday at noon Pacific time. And all these recordings, slides, and exercises are archived in our members area. The reasons we do this is because we know that being a successful small business owner can be a great experience, but we also know that it's tough. You need support in order to be successful, and we want you to get to know us. Because when you get to know us, you'll know first and most importantly that we really do care about you. We want you to be successful in every area of your life, whatever that means to you. We want you to find the greatness, the happiness, the divinity within yourself, and then remember it, embrace it, and live it every single day. Our passion is helping entrepreneurs and small business owners get clear and stay focused so that they can grow faster. And today's topic for our Office Hours presentation is on business cycles. We're going to talk about all of the different cycles that we have in business, not necessarily economic cycles, although we might get into that just a little bit, but mostly about the things that you need to do on a regular basis, a periodic basis, and repeating basis about your business. We always relate the subject matter of the day to one or more of the key performance areas of success. And today's about leadership, about your responsibility to understand what those cycles are and regularly scheduled activities are, but also about financial management, because it's the responsibility of the CFO of the company or whoever is performing that role to make sure that you're paying attention to all the government regulated accounting cycles that we have. And with the Awakened CEO system, we talk about how important it is to understand that business growth, professional growth, and personal growth go hand in hand. And today we're going to talk about the mindset, the methods, and the momentum in business growth and professional growth, and a little bit of talk about personal growth and the mindset of personal growth when it comes to business cycles. So in today's agenda, we're going to talk about annual activities, quarterly activities, monthly activities, weekly activities, and daily activities, and then we're going to sum it all up to the bottom line. And then we're going to have a little bit of information on some special offers that we will talk about at the end of the presentation. Let's talk about annual activities first. The most important annual activity that I believe that any company can engage in is what I call the annual strategic plan, or the annual planning, where you review the performance from last year, you reset your goals and priorities. This is your opportunity to take a long-term look at where the company is going, where you want to be in the next 3 years, the next 5 years, etc. Most larger companies will bring in their executive teams, of 4, 5, 15 people, and have a 2 or 3 day off-site annual planning event. At least 1 day, but oftentimes going into 2 or 3 days. And in those annual planning events, we'll talk about where we want to be, what our values are, what our vision for the company is, what worked well for us last year, what did not work well for us last year, where we see the industry and the market that we're serving going, what our competitors are doing, and really think through that detailed process. It's been my privilege to do a strategic planning engagement, to facilitate rather, strategic and planning engagements for dozens and dozens and dozens of clients. And they always come out with a couple of things. Number one is renewed insight. They come out with a plan of action. And number two is really a better sense of camaraderie and teamwork. Because when you pull the team together and you get the team to talk about all the things that need to be talked about, and you get the team to devise a plan and agree upon that plan, where everybody understands what their roles and responsibilities are in the completion of that plan, you have greater productivity and you grow faster in your business. So the number one most important thing that I encourage you to do on an annual basis is a strategic and annual plan. And if you haven't done one for 2017, it's not too late. We're getting close to the end of the first quarter. And if you didn't do one at the start of the first quarter, you can certainly do one towards the end of the first quarter and plan out the rest of the year. Many large companies do kickoff meetings, especially the really large ones. It's been my pleasure to work for large enough companies to where they had, 100 salespeople. And every January, we would go somewhere special. We'd go to Las Vegas, we'd go to Hawaii, we'd go somewhere to reward the people who made quota in the previous year and to kick off the next year. Oftentimes they would do it, they would have the annual kickoff meeting on a Thursday or Friday, and then all of the people who made quota last year, you got to jump on a plane and go somewhere special on Saturday and Sunday and maybe a few days beyond. And boy, that really motivates the heck out of the people who are left behind, who didn't make quota. They want to do everything they possibly could to jump on that plane with other people and head to that far-off destination. On an annual basis, there are things that you need to pay attention to from a tax point of view. At the end of January, you have to put out W-2s and 1099s, and on March 15th, for most companies, you have to do your tax returns. And I say March the 15th for most companies. That is LLCs, partnerships, subchapter S corporations, and regular corporations. The only type of business that doesn't have to file a separate tax return are those who really are what they call pass-through entities with no other owners. So if you are self-employed and you have never formed an LLC or a C corporation at any time, then all of your business tax goes on a Schedule C and is attached to your personal return and isn't due until April 15th. But if you have partners in the business, if your LLC has been formed and is taxed as a subchapter S corporation, or if you're a regular C corporation or a nonprofit or a partnership of any kind, you have to have those tax returns completed and filed by March the 15th, and the K-1s issued for all of the people who have an ownership interest in that company and either have a profit flow that's designated to them or a loss that's designated to them based upon their ownership interest. So don't forget that. If you don't hit that deadline of March the 15th, there are penalties, and some interest can be certainly charged if you're an entity that pays taxes on it by itself, a taxed entity like a C corporation. Also, in addition to the tax returns, business licenses are due, and that may be state business licenses, it might be county, it might be local business license, city business license. It's your responsibility to understand when those business licenses renew and to make sure that you are paying those business licenses. There may be lots of other types of insurance and other things that are due on an annual basis too. So it's important for you or the people at your firm who are responsible for tracking things to create that accounting calendar or that business calendar that really makes note of when things like insurance premiums are due and when all of these taxes are due and when other annual activities are due. Before we move into quarterly and other sorts of things, I want to talk just a little bit about seasonality, because seasonality also kind of happens on an annual basis, and almost every company that I know has some seasonality associated with them. A classic one is the summer-winter seasonality, where we do some things. Business is one kind of business in the winter and one kind of business in the summer. The classic would be the construction industry, where we don't build houses in Minnesota, in December and January and February because it's just too freaking cold. You can't pour foundations and let the cement set appropriately unless you've got many, many days of above freezing temperatures. So you just can't do a lot of construction activity, anything that works with concrete, when it's freezing outside. So construction industry has a tendency to be seasonal, not so much in the southern part of the United States. Down in Texas, Southern California, Florida, etc., you don't have that same type of seasonality. Although in Florida, you've got the hurricane season and the rest of the year. And believe me, August in the middle of Florida is not comfortable at all, so you do have to watch seasonality a little bit. The best example of seasonality I saw was when I was living in Denver, Colorado. There's a company called Colorado Ski and Golf. They recognized that they sold a lot of ski equipment starting in August and running through probably March or so, maybe February or March, and they needed something to balance out their revenue stream for the rest of the year, so they also sell golf supplies. So starting in March, when the ski season starts to wane down and people are no longer buying skis and ski boots and ski poles and ski gear, they start selling golf clubs and golf bags and golf equipment and golf apparel and that sort of stuff. It was really a great combination. I really thought that was extremely smart of them to balance out their summer activities with something that would sell in the winter, and balance out those things which sold in the winter with things that sold in the summer. You may need to do that too. I had a client back in Colorado Asphalt Services, that decided to balance out their activities because in the winter they do snow removal. So they've got a lot of big dump trucks, they've got a lot of big heavy equipment that they use whenever they're paving roads, and they decided to use that for snow removal, and they went out and got snow removal contracts. Same thing's true with another client that I had that was in the roofing business. You know, they put on roofs during the spring, summer, and fall, but in the winter they did snow removal, especially snow removal from roofs, which is real important where they was, which is up in the mountains of Colorado. So if you find yourself to have a seasonal business that's summer and winter, be creative like some of those clients that I have had, and find another product line that will help balance out that seasonality for you. Many companies have a holiday seasonality. If you've got a consumer product, you recognize that maybe half of all of your annual earnings will come in October and November and December in the United States for those seasonal activities. But there are other cultures as well, and we have to pay attention to the holidays in those other cultures. For example, the Chinese New Year, they take off almost an entire month during the month of February to celebrate the Chinese New Year. Europe has a tendency to take off the entire month of August. So you need for their annual holidays. So in addition to being aware of the holiday season here in the United States, you also have to be aware of the holiday season internationally if you are doing business internationally, or if you have clients that are doing business internationally or suppliers that are doing that. Some businesses have seasonality based on school year. You know, certainly educational institutions, but other kinds of institutions too, especially in August and September. If you're selling consumer products that are oriented toward the school year, you'll see a big surge in children's apparel and other sorts of back-to-school activities for the school year itself. And when summer starts and most kids are off school, you'll see a huge uptake in some of the summer-related activities associated with children too. If you're in the fitness industry, you know that you sell a lot of memberships in January, and a lot of people start on physical training programs and start in with the 24-hour fitness and the other gym programs starting in New Year as they make their New Year's resolutions to get healthier and be thinner. And I'd say almost every business has some seasonality. Even my business has seasonality. As a consultant, I recognized many years ago that especially when I'm dealing with larger companies, that it doesn't make much sense to do things in December with them because so many people are on vacation at some point in time during December. It's hard to do strategic planning activities, and it's hard to do activities where the entire team is supposed to come together. Likewise, by the way, it's true in August or late July and August. It's hard to schedule 2 and 3, 4 days strategic planning activities and offsite activities during those months because it really collides with so many people's vacation schedules. So even a consulting business where you wouldn't necessarily think there was some seasonality with that, there certainly is. In December and January, we participate with people's annual planning activities, and so we get a little bit of an uptake in January after a lull in December, and it's hard to schedule things in August. And whatever your business is, I encourage you to think about the seasonality in your business and analyze that. Let's talk about quarterly activities now. So on a quarterly basis, I think it's important for you to get that team back together and revisit your annual plan, or what we put together for people is a phased growth plan. But I think it's real important to do that every single quarter. And also quarterly, you have some tax obligations. For C corporations and other corporations, you may have estimated tax payments or quarterly tax payments that are responsible. The quarterly, it's a little bit strange whenever you're doing self-employment tax because you have to make tax payments, but it's not quite quarterly. It's in I believe it's in April and in June, and then 3 months from them in September and December that you have to make those tax payments. So you have to watch the timing of those quarterly tax payments. And those of you who have worked with me at all know what a huge fan I am of a 90-day growth plan, so that every quarter we go back in and revisit our 90-day growth plan, and we reset all of our goals and priorities for the next quarter, and honestly check in with ourselves on how we did in the previous quarter and go for it. We seem to be geared in our culture on the 90-day cycle, and I'm certain that comes from seasonality. You know, of the winter, summer, spring, and fall seasons that we have, I think we think it may actually be instinctual about us to think in terms of 3-month cycles. So I encourage you to think about that when it comes to planning your business too, and focus on a 90-day growth plan. One other thing I might mention is important for you is if you have information that you're sharing with investor prospects or partners, it's important for you to update all of those materials every 90 days. It's your responsibility to fairly disclose the status of the business and the plans of the business. And generally speaking, that means updating your business plans, your private placement memorandums, your pitch decks, any of that stuff every 90 days to make sure that you're accurately reflecting the current status of the business. And oh, by the way, if something material happens in your business in the middle of a quarter, you also have to update your plans to reflect that, say a valued team member leaving the business or coming into the business. In addition to quarterly activities, we have monthly activities. Monthly, I think it's really important for you to review the quarterly plans, to update your 90-day plan, to set the new goals for the new month, and to have monthly staff meetings. That brings bringing the entire team together and reviewing the performance for the last month. And that's typically after we've closed out the month. And I'm going to be talking about closing out the month in a lot of detail here in just a few minutes. But that's something we definitely want to do on a monthly basis. You can do a hard close or you can do a soft close. A hard close says that once we've closed the month, we don't go back and make any adjusting entries at all to that previous month. We'll only make adjusting entries to this month and forward. A soft close says that, you know, if we find an error in an invoice or something, we can go back and change the activities for a previous month, and it's not quite so cast in concrete. I also encourage you, by the way, from a relationship point of view and a marketing point of view, is to think about making connection calls on a monthly basis. You know, every single month as you close out your activities, put that as part of your monthly checklist of making a note of the 5 or 10 or 50 people that you want to reach out and have just a quick connection call with. And sometimes that can just be a little text. It can be a quick email that says thinking of you, etc. But make those connection calls and reach out to people to keep those relationships fresh. On a weekly basis, I think it's really important for you to do weekly goal review and a tactical plan for the week, and to have your weekly staff meetings where you're reviewing the performance for the previous week and making sure everybody understands exactly what you're going to do for the next week, and make sure you schedule your team member meetings. What I mean by that is, as a leader at your company, it's important for you to have one-on-one meetings with everybody who's on your team every single week. So we can have our weekly staff meeting, a group meeting, but if somebody is reporting to you and you're controlling their activities, then it's really important for you to have a one-on-one conversation, even if it's just 15 minutes. And I recommend 30 minutes or an hour. But even if it's just 15 minutes, check in with them on a weekly basis. And finally, we're going to talk about daily activities, because I do think it's really important for you to be a maximum productivity is to focus every single day on daily activities. And that means every single day we're going to review the performance from yesterday, the calls that we intended to make, that we did make, the new opportunities that came into the door, the new fires that came up that we need to fight. Review the performance from yesterday and make your plan for today, and review your appointments for today. And at the end of the day, confirm your appointments for tomorrow, because it's been proven that if we confirm our appointments for tomorrow, people are more likely to show up for those appointments than if we fail to confirm those appointments. And set all of your tactical goals for the day. And that means processing orders and sending out invoices and doing the accounting and the delivery activity. But one of the most important things that I do on a daily basis that I strongly encourage you to do and encourage everybody to do is daily self-reflection. So daily, every single day, whether that be in the front of the day or the end of the day, reflect on the day. Reflect on yesterday or reflect on the day that just happened and say, when did I show up extremely well? What were times where I did not show up at my best, and why were those reasons? And what can I learn about myself to improve myself, to be a healthier, happier, stronger person from the challenges that I faced during the day? I think that's really important, and I attribute that, by the way, to my growth over the last 15 or 20 years is that process of daily self-reflection. So while we're thinking about business, let's not lose sight that our business growth and our professional growth and our personal growth go hand in hand. So be asking yourself, what have I done to grow personally every single day? And what have I done to grow professionally every single day? Because it's the investment in those areas of your business and your life that will really, really pay off in the long term in the growth of your business. I mentioned earlier the closing of the month, and I want to talk to you a little bit about that because it's real important from an accounting point of view for you to close out the month and have a detailed checklist. So I reviewed the detailed checklist that I created for myself. I've been running my own books now for 16 years. So every month for the last 16 years, I've been following my own accounting calendar and my own month-end financial checklist. And when I operate as a CFO for my clients, one of the very first things that I do is establish the annual accounting calendar and develop the month-end checklist for them so we know exactly what we need to do. And here are some of the things that you might include in your month-end accounting checklist to close out the month. First of all, take a physical inventory. If you're a company that tracks inventory, it's real important for you to take a physical inventory at the end of every month for almost every company. Now, the only exception is that if you have an accurately running perpetual inventory system so that you know not only at the end of the month, but every single day, you know exactly what you've got into inventory because every transaction that goes through the system, every time you withdraw something from inventory and every time you put something back into inventory, you are accurately tracking that transaction and you know exactly what you have in inventory at all times. If you're running a very accurate perpetual inventory, you might not need to do a physical inventory on all of your stock at the end of each month, but you are likely to do a physical inventory on what they call the Class A stock. So when we do physical inventories, we have A, B's, and C's, and even D stock items. And the A's are those extremely high value items that have a very long lead time, and it's extremely important to us not to lose any of those and have very accurate inventory counts because the entire business depends on us having accurate inventory knowledge for those items. You may find yourself still doing physical inventory on those Class A inventory items at the end of the month. If you don't have things in inventory, you don't have to worry about that. It's not a part of your plan. But in most product companies, do a physical inventory at the end of every month. We also encourage you to process expense reports. It's real important for you to have an expense report that you fill out as a member of your business and submit the expense report to your business to accurately track and be reimbursed for the personal expense items that you had in the business itself. So you may have taken somebody out for lunch and you didn't use your business credit card. That can be a personal expense. You may have other things that show up on personal credit cards or things that you paid for in cash that you want to do on a personal expense report. You may, for example, decide that a portion of your internet at home, or a portion of your phone bill at home, or a portion of some other type of monthly expense like automobile mileage, needs to be charged to the business and is fairly expensed by the business. So you need to create an expense report and file that with the business and write yourself a check for that expense report to make sure that you're keeping your personal expenses and your business expenses separate and that you're really running the business as a business. However many bank statements that you have or bank accounts and credit cards you have to download the transaction from the banks and from other financial partners, and then you need to allocate each one of those transactions to the appropriate expense and income account to make sure that your books are up to date. But wait, there's more. We also want to balance the checkbook for every single bank account that you have. We want to reconcile the bank accounts. We want to make any adjusting entries that you might have. For example, one of the most common adjusting entries is that we want to record an obligation of the company to pay us even though it doesn't have the cash. You know, I need to draw $3,000, $5,000, $10,000 a month out of the business, and if it wasn't able to pay me the payroll that it owes me or the compensation that I feel like the business owes me, then I'm going to make an adjusting entry. I'm going to accrue for that. And you might want to make other accrual entries as well. You may want to assess some of your clients' finance charges. I hope you don't have too many of those, but you may want to assess those and then send out invoices and statements at the end of the month. But wait, there's still more. After you do all that, you want to review your financial performance and take a look at a month-by-month P&L for all of the months in the year, a month-by-month balance sheet so that you can see the differences in the balance sheet account from one month to the next. And you may want to take a look at a complete general ledger to make sure that all of the transactions are being posted to the appropriate expense accounts correctly. And by the way, that's what I do as a CFO when I work with my clients, is I request from the bookkeeper, whether it be their bookkeeper or my bookkeeper, you know, a detailed month-by-month P&L, month-by-month balance sheet, and a complete general ledger so that I can have a second pair of eyes. I can be the second pair of eyes that looks at those financial reports and assesses their accuracy of them so that we have a fair status of the business before I go and begin to talk to the CEOs and the COOs about the financial performance of the business. We also want to update all of the key performance indicators. We want to make those collection calls in case you have to do that. Once you send out statements, it's not just enough, by the way, to send out statements to people who owe you money. You need to be assertive and sometimes even aggressive when it comes to collecting that money, because a lot of times the reason they haven't paid you is because, you know, they owe a lot of people a lot of money and they will oil the squeaking wheel. And you need to be one of those, because if you don't squeak, you know, you're going to fall in second, third, or fourth place to the people who are squeaking, and they're just going to decide, well, I guess you really didn't need that money, or you really didn't want that money because you weren't really asking for that money. So you have to make the collection calls and change, you know, put somebody on COD status, stop providing services to them if you find that they're getting over their credit limit. And last but not least, when it comes to closing out the month, you want to make sure you back up all of your files. So I know I use QuickBooks. Most people use QuickBooks in their business with people that I'm talking to. It'll automatically suggest to you periodically that you back up the files in the business, and take that suggestion and make sure that those are stored offline. By the way, the favorite backup method that I have is called Carbonite. I use it, you know, every single day. I'm assured that every file that I have is backed up in the cloud somewhere, and that includes the accounting files. If you'd like to try out Carbonite, let me know, because I can get you a free month or so, because I do recommend the service and use it a lot. Make sure that you back up your files, and it's not just enough to back them up to your local hard drive. Make sure that it's backed up to some other drive. We used to have tape drives associated with our systems. We used to have to copy files on diskettes and on mini floppy disks and those sorts of things. But today it's so easy to establish a service that automatically backs up all of your files to the cloud at a very nominal cost every single year. So here's the bottom line. You know, somebody on your team has to keep track of all of these required activities, all these seasonal activities, annual activities, quarterly, monthly, weekly, and daily activities, and make sure the job gets done. That's usually the CEO, the CFO, and the COO working together to make sure the job gets done. But if you are not an organized person, and frankly, there's a lot of CEOs out there that are highly visionary and creative people. They're great with relationships, but they're not really good at organizing things. They need to get somebody on their team to really help organize things and keep track of things. They need those checklists to go through every single month. And I hope that today's conversation has given you some information on checklists that you might have. And I know that when you pull these slides down that you'll get a lot of them as well. And if you need a sample checklist, send me an email and I will get one to you if there's not already one in our library online. So that's been today's agenda. We talked about annual activities, quarterly activities, seasonal activities, monthly, weekly, daily activities, and summed it all up to the bottom line. With the Awakened CEO system, it's really important for your business growth to have the mindset that you can and you will track those things that you have to do on a routine or periodic basis, that you will put monthly checklists and annual accounting calendars and whatever is necessary in order to make sure you're doing the things that you need to do to keep in compliance with government regulations and to keep track of everything and to take advantage of the opportunity you have with your team to create great plans and execute great plans together. And I strongly encourage you to get into momentum. And that means right now today, think about the checklists that you need that would really pay off for your business and begin to develop those checklists. And if you need support, reach out to someone who can help you do that. From a professional growth point of view, it might be very helpful to you to research other checklists, month-end closing procedures, etc., so at least you understand what that is. Maybe it's having a conversation with your bookkeepers and your CFOs and asking the question, what do you do on a monthly basis? What should we be doing on a monthly basis that we are not currently doing, etc., and get into momentum on that too. And from a personal growth point of view, there's a couple of things. Recognize that it's really important to be organized when you're in business. And even if you are not the organized one, then be vulnerable about that. Be humble about that and recognize that you can reach out and get the support that you need. And as I mentioned earlier, I think it's really important for you to do a daily self-reflection process to ask yourself what went well yesterday and what didn't go well. What tagged me, what triggered me, what charges did I have, what caused me to be angry and upset, and what can I learn from that experience so that you can learn to be a healthier and happier and stronger person over time. If you would like to do more research into this, I recommend a few of our previous office hours programs. Number 60 was on the vital signs of business, which will give you some information on key performance indicators or KPIs. Number 96 was on strategic planning. Number 107 was on how to be great at financial management. And 142 was on reading financial statements. So I encourage you to have a real positive attitude about the things that you do on a routine basis and a periodic basis. And, for those people on your team who are good at being organized, give them a pat on the back and a shout out of appreciation in the way that they help you keep things on track so that you can be very clear in your business and you can stay focused and grow faster. We're going to go into open Q&A here in just a minute. Our next office hours is going to be on March the 13th, and the topic is TBD. I'm not sure what we're going to talk about next week. I want to give another quick shout out and a vote of appreciation to Marcel Allen, who's on the call with us today, who suggested that today's topic be on these cycles of business. So thank you again. I do listen to your suggestions, and I'm eager to talk about things that are helpful to you. So give me some suggestions. You can either write me an email, give me a call, or go to paulsurvey.com and fill out something. As a reminder, we still are offering our No BS Business Growth Package, which is a series of 4 90-minute consulting sessions. In the first one, we do a business clarity questionnaire. Session 2, we do a phase growth strategy, which is your long-term plan. Phase 3, we do a foundation profile. And Phase 4, we do that 90-day growth plan that I am so much a fan of and that I talked about earlier today. This No BS Business Growth Package normally retails for $1,500. We are offering specials on that. Give me a call and find out what the price is today, because it depends on who you are. Regardless of who you are, though, it does come with a 100% money-back guarantee. If we get through the first session and you don't want to continue, just let me know and I'll give you all your money back. And if we get through all 4 sessions and you don't agree the package was worth every penny, just let me know and you get to set the price. That's right. We'll negotiate. You tell me how much it was associated with you or whatever you felt it was worth. So I want you to call to schedule your free strategy session and learn about discounts and bonuses and what kind of a special deal I'll make for you today just because of who you are. And with that, let's go into open Q&A and answers. And we do have some folks who are on the call who have typed in some questions. And so I'm just going to take these one at a time and we'll go through them. First of all, a question from Marcel. Thank you very much. It said, you spoke about quota in annual activities, and I hope you cover quota in monthly. Oh, I'm sorry, I think it was a typo. I hope you cover quota in monthly, quarterly, and weekly too. Excited to learn more. Marcel, I'm going to take you off of mute. Are you there? And was that a typo? Was that quota?
Yeah, can you hear me now?
I can.
That is supposed to be quota, and I think you and I have both been in the sales conversation for years. But that's something with like the daily and the monthly and the quarterly checklists. I don't necessarily have a set review time to check that quota, and or I don't always set a quota, right? So for me, I was just curious to learn more about that because I'm a person of one. I don't have a huge sales team, but I should still have a sales quota potentially, and I don't know, just curious to learn more about what that might look like.
I think you're absolutely right. Thank you very much for that clarification. I appreciate it. I'm going to put you back on mute for a second and raise up your hand if you have more comments here. But it is right. So it's not, you don't set an annual quota. You set quarterly objectives and quotas. You set monthly objectives and quotas and weekly. And I've even seen some companies do daily quotas. We have our daily quota of phone calls that we were supposed to make, of deals that we were supposed to close, of face-to-face meetings that we were supposed to have, etc. So quota can be a lot of different things. It can be focused on revenue through the door, the number of deals or the total dollar volume of the deals that we close, but quotas can also be on networking activities, can be phone calls that we made, can be emails that we sent out, can be letters that we sent out. You can have activity quotas in addition to having financial quotas. And as I oftentimes tell people, you have no hope of being successful executing a long-term plan or an annual plan unless you can execute a quarterly plan, unless you can execute a 90-day growth plan. And you can't execute a 90-day growth plan unless you can properly execute a monthly plan and a weekly plan and a daily plan so often. So if you really want to pick up your performance, then track your results. And if you really want to pick it up beyond that, then you want to report that to somebody else. That's called Pearson's Law, by the way. Pearson's Law has 2 different parts to it. One part says that which is measured and tracked improves. And the second part says that which is measured and tracked and reported to other people improves exponentially. Magic happens whenever we report our results to somebody else. By the way, that's why business coaching is so valuable. One of the reasons why business coaching is so valuable is because when we report our financial activities and our KPIs to somebody else, it improves the results because it improves our focus on those things that we want to focus on. So that's really, really important. And thank you for bringing that up. We want to have annual quotas, etc. I know that I review my financial performance every single week. I have goals every week for the number of billable hours that I had during the past week and the number of actual revenues that I accrued. And every month we got goals for the cash that comes in the door. So I encourage you to know your numbers. To know your numbers. If your number is $10,000 a month in revenue, know that that's $2,500 every single week. And if you didn't make $2,500 last week, that means you may need to make $3,000 or $3,500 this week. And play that game and have those numbers at the top of your mind so that you can be focused on those revenue producing activities whenever you need to do that. One of my great coaches, a lady I've been working with now for 5 years, her name is Annette Bao. She has a product called the Millionaire Series. She is a financial advisor and also is a coach to hundreds of other financial advisors. And her advice is simply this, that if you're not making the money that you need to make, then make sure that you're focusing 80% of all of your time and effort on revenue generating activities. And that means that you might have to put aside that book that you're writing, and you might have to put aside other things that you really like to do, the conferences and workshops that you're going to, all of those things which we get the freedom to participate in as small business owners. But if you're not making the cash flow that you really need to make, then focus 80% of your time from the second you get up in the morning to the second you go to bed at night on cash generating activities, making those plans, making those calls, closing those deals, providing value to your clients, etc., etc., etc. So thank you for asking that question. We also had another question come in from an attendee on the call today, Nicholas St. John. Let me see if I can grab this here. Ask one. It says, I've designed a new versatile, very comfortable holster for concealing and carrying guns. Did my first gun show in Salina and sold 7 bottles. Congratulations. And you've been to gun ranges and shops with very limited acceptance, though. Looking for ideas off the beaten path and for other places to introduce this holster or another angle for gun shops and ranges. I'm going to go ahead and take that because it's really very interesting. This is something that I know nothing about. I don't think I've ever been to a gun shop, maybe once, and I don't own any guns. I've never been in the service. I did own a .22 rifle when I was in high school, but I got rid of it right away after my first hunting experience because I didn't like it. So I know nothing about this. So let me brainstorm with you a little bit. If you've been to gun ranges and they don't want to carry it, I don't know if these are individually owned or not. A lot of times, individually owned shops will give you the opportunity to put your product on their shelves on consignment, especially if you have some merchandising associated with it. And merchandising means some sort of display or brochures or handouts associated with it. Because if you can sell it on consignment in there, and if you have it to where it's prominently displayed, they might sell a few of them. If you're just asking them to buy a bunch of them at wholesale and put it up on the shelves, they're thinking to themselves, well, my shelves are already busy or mostly busy and full, and I'm already generating revenue from everything on my shelf. So what is it that I have to take off of my shelf in order to put your product on the shelf? And they think about it in terms of a swapping out the revenue. If I take this holster off the shelf and I put yours on the shelf, am I going to increase my revenues or decrease my revenues? So my experience is, though, with individually owned shops, whether it be a gun shop or a donut shop or a small boutique clothing store or a shoe shop or whatever, when they're individually owned, the entrepreneur, the business owner, has a lot of discretion as to what they put on their shelves. And if you make them an attractive enough offer, and oftentimes that, listen, we'll put up the display for you. You don't have to do a thing. All we have to do is put these here. All I want to do is track it and see how well it sells, that they will do that for you, at least on an experimental basis. I know Whole Foods does that for a lot of my clients. They'll try things out on their shelves. The local Whole Foods store managers have a lot of discretion to bring in locally supplied product, but you do have to give them what they call a free fill, or you have to give them that first case on consignment, etc., in order for them to make the investment in their shelf space to see whether or not your product's going to move in their particular store. Hopefully that was helpful to you. Is just make them a deal that they can't refuse so that you can build the social proof and the traction. And that's what you really want here whenever you're bringing a new product to market. You want to go to store number 2 and say, hey, we put this on the shelves at store number 1 and we sold a bunch of them and we think we can do it at your place too. But you got to find that store number 1, and that means making them an offer they can't refuse. Hopefully that was helpful to you. Got a couple of more questions. I love this, by the way. Thank you so much for typing these questions in. I've got some other questions that we're going to go to here in a second, but I really love the way that you're typing questions into the chat log and making this an interactive call. Thank you so much. Marcel, love the learning on Pearson's Law. That was great. And here's one from Michael Charters. Oh, and Marcel also asked what was the name of the backup file software. It's called Carbonite, Carbonite. But if you send me an email and allow me to send you an invitation, you get a month free, and I think I get a month free too. So if you're thinking of Carbonite, then by all means let me refer that to you, and we both enjoy a little benefit therefrom. Thank you very much. And I started using Carbonite because a friend of mine referred me to Carbonite many years ago. And I tell you, it really takes, I don't ever worry about my laptop crashing anymore. I just flat don't, because I know all of my files are backed up. I know that sounds like a commercial, and perhaps it was. Next question from my good buddy Michael Charters. If you were to budget a subcontractor or outsource these financial activities requiring reporting for taxes and quarterly reports, how much should one anticipate for this service in a small business? It really depends on the number of transactions that you have. So some businesses run with only 4 or 5 transactions on a monthly basis, and other businesses might have the same amount of revenue, but they might have hundreds of transactions. If you're selling things at $10 an item, it takes 1,000 transactions to get $10,000 in revenue, but if you're selling it at $3,000 a piece, you may only have like 3 or 4 of them. So it does depend on the number of transactions, the number of bank accounts. But a good rule of thumb is we start with about $250 a month for using outside bookkeepers. And outside bookkeepers, if they were charging by the hour, are $40 to $60 to $70 an hour. If you also couple in CFO services with that, maybe the good starting point is $500 a month, because you're going to spend $250 on bookkeeping and another $200 or $150 or whatever on having your CFO oversee the activities of the bookkeeper, make any adjustments, and then discuss the financial results with you. So if you're just looking for bookkeeping support, $250 can start, although I've seen some people hire full-time, full-charge bookkeepers for $3,000 or $4,000 or $5,000 a month if your business is strong enough. If you're running $1 million business or a $2 million business, you probably need either a half-time or a full-time bookkeeper, again, depending upon the number of transactions that you have. If you're running $1 million business, and you're a $100,000 a month business, and the average transaction is $100, you got 1,000 transactions a month, and that takes a lot. 1,000 transactions a month is 50 transactions a day, and that takes a lot to make sure that you've got all your invoices sent out and you're following up on your collection calls and doing all of that sort of stuff. So it really depends on the size of business, but hopefully that helps you a little bit to start off with. Let me take a look at the next question here. And Marcel says that she pays $130 flat each month for your bookkeeper as a frame of reference. That's a pretty good one. So Marcel, my guess is that you have, a few dozen transactions a month, not hundreds of transactions, but it's probably only taking your bookkeeper 2 to 3 hours a month to help you out with all of your books, and that works extremely well. So congratulations on that. Maybe it's a little more than that, because you might be getting a good deal on a bookkeeper too. I think you did get a good deal. So thank you for those comments. I really do appreciate it. And Nicholas came back to me and said, that's why his product is in a bottle, because it can easily sit on their counter. You may want to put that in the bottle, but you may also want to have some merchandising then, which means displays and brochures and other kinds of things that makes it real easy for them to try to sell your product. With that, let me jump in and answer a couple of the questions that came in via email and a couple of the other discussion topics that I had. I thought about, and we got about 10 more minutes, so I'm only going to be able to do a couple of these, thankfully, because of all the great interaction that we got today. I thought about, when I put out this office hours message, some people might think about it in terms of business cycles, because I'm not an expert on the economy, but we do know that the stock market goes up and down. We do know that the United States and the entire globe goes through economic cycles. I did just a little bit of research before today's office hours, and here in the United States we had recessions in 81, 82, we had recessions in 91, 92, we had recessions in 2000, 2001, We had a recession in 2008, and now we are absolutely in a boom economy. No doubt about it that we are in a boom. So the question is, how long will this last? You know, if history repeats itself, which it most often does, I would say about 10 years or so. And oh, by the way, the last recession, the really nasty, ugly one, worst since the Great Depression of 1927, you know, was in 2008. I expect this boom market to last another few years unless something nasty happens. And there's lots of possibilities of nasty things happening, but I expect it to last through 2019, 2020, unless something happens nasty like we impeach the president, or we have another terrorist attack, or you know, a big earthquake causes California to fall off and slide into the ocean. You know, there are lots of external things that can trigger recessional activities that are not necessarily part of the normal economic cycles. But there are economic cycles, and when you're talking to your financial advisor, and the next time you talk to them, ask them that question. What did they expect? How long do they expect this economic boom cycle to last? And what should you be doing from a financial advisory, financial management point of view to account for that and manage the risk of this economic cycle coming to an end abruptly through some sort of a, you know, external event? That's a really good question to ask them. I got another one here that says, tell me a little bit more about the daily self-reflection process. Well, I'm a little bit of a, I'm very focused on the daily self-reflection process because I started asking myself in 2007, and even before then in 2005 and 2004, you know, what made me angry yesterday? Because I used to get angry a lot. I used to get angry, maybe, I mean, not yell and scream and throw things angry, but pissed off, you know, of 2 or 3 or 4 times a day, or even more than that. Certainly when I was a younger man, I used to do that a lot. And you know, I don't like that. I don't like being angry. I like being peaceful and joyful and loving and kind and cheerful all the time. So I ask myself, well, what is it that tags me? What is it that triggers me? What is it that caused me angry? And I begin asking myself that question. And then I ask myself another question. Well, you know, what disappointed you yesterday? What frustrated you yesterday? And what caused you to have low energy? Did you have any low energy yesterday? Were you judgmental of anybody yesterday? Did you blame or shame or hold somebody else responsible for things that perhaps you should have taken responsibility for? And gradually over the years, I developed my own personal daily self-reflection process that has about 100 questions to it. Yep, about 100 questions that I go through every single morning. Doesn't take long, only takes about 15 minutes, unless one of those questions goes, yeah, you know, there was something yesterday. One that got me a couple of days ago was, did I desire something so much so that it got in the way of my happiness? And the answer was yes. I did desire an outcome, and because I wasn't getting that outcome from the effort that I put in, it got in the way of my own happiness, and I needed to remind myself that there's nothing that needs to stand in between me and my own happiness. There's nothing that needs to stand in between you and your happiness except for a belief and a fear. You know, and once we identify those, you know, we can do things to reprogram ourselves at a subconscious level to remind ourselves of the opportunity we have to step back into a higher vibration, and to remind ourselves of the thousands of ways that we can use to shift our energy. So as you can tell, I get kind of excited and happy when I start thinking about such things. But I encourage you to start your own daily self-reflection process in the morning or in the evening, whichever works for you. You know, ask yourself, how many times yesterday did I get pissed off, and what caused that? Here's just a little quick anecdote that I found when, you know, I was about a year into this process, and I found that I always got pissed off when I talked to customer service representatives. When I called my internet service provider on the phone to tell them that my internet was down, I got pissed off. And so I really dug deep into that. Why is that? Why do I get pissed off doing that? And the answer was that I felt trapped. I felt out of control. I had some victim energy and some prisoner energy going in there because I knew that I had maybe very little influence on the outcome. I really wanted my internet to get back to work. I wanted my home phone line to get back to work, but I felt like that I had very little influence or very little power over that, and it was this victim and prisoner energy coming up within me. So I decided, once I figured that out, that from that day on, that I was going to be the sweetest, kindest, most cheerful and positive person whenever I called any customer service rep that I could possibly do. Because heck, it's not their fault. They're not the one out here cutting the phone lines. They're not the one who's responsible for fixing it. They're probably just a really good person like you and I trying to do the best they can to help somebody out. So it was that daily self-reflection process that allowed me to uncover that charge that I was having, that allowed me to dig into that, to realize what was really the underlying reason for that, and allowed me to change that. And it really helped. I haven't got pissed off at a customer service representative since that day. And it was that daily self-reflection process that caused that. And I'm confident that when you engage in an intense daily self-reflection process, that you're going to find things that you didn't know were happening, reasons that you were getting pissed off that you didn't know what was causing it, and you're going to be able to reprogram your subconscious mind in the same way that I was able to reprogram mine and go forward. So thank you for listening to that. I really enjoyed talking about, as you can tell, I really enjoyed talking about the power that we all have to step into our greatness, to discover it, embrace it, live it every single day. And as part of your cycles of business, also make your cycles of personal growth. For some people, that's going to a retreat every summer. Maybe it's going to conferences and workshops to be inspired, to be enlivened in some way periodically, once a quarter, once a year, once every 6 months, whatever that happens to be. But think about cycles for personal growth. Think about cycles for professional growth, and think about cycles for business growth, and put them on your calendar, make a checklist, get somebody on your team to help you make sure that you stay organized and focused on that checklist so that you can do the things that you know are going to be beneficial to you in the time frame that you need to do them, so that you can be very clear, so that you can stay focused, and so that you can grow faster in your business. So I want to thank everybody who joined us on the call today, especially those of you who typed in questions in the chat log and joined me in real time. I really do appreciate it. I just love to do these calls with other people. So thank you so much. And next week, I hope you'll come back and join me again. And until then, this is Paul Hoyt wishing you a most marvelous and prosperous day. Bye-bye.